Hi there. This is about the debt crisis, and we hear a lot of news regarding the debt crisis. We see our stock markets fall enormously. A lot of people are losing money. Um, this has come out of a blue sky. Where is this debt crisis coming from? If you look at Greece and Europe, and is the UK at risk? Is the US at risk? How do we see that? What about Japan? So what we did is we just made an overview of a number of key indicators for the different countries that are in the news with regards to the debt crisis, and to see what is actually happening here. So what you see here is the number of countries, like you have Ireland, Greece, Spain, Japan, UK, US, and we have indicated for a few, shown a few indicators. 2008 debt, public debt, government debt as a percentage of GDP for that country. 2009 public government debt as a percentage of GDP. The forecast that we have seen for different countries for public debt as a percentage of GDP. We haven't just looked at the debt, but also at the deficit. The public deficit, say how much money governments are short in a certain year, and that as well as a percentage of GDP. We have looked at the 2010-2011 growth estimates, and we have indicated the unemployment for the different countries as what we could find. Now, what you see is that the country with the biggest debt problem, or as they say in the debt crisis, is Greece. But Greece actually has a debt as a percentage of GDP, 115%, which is the same as Italy, which you never hear as having a problem, and which is much lower than Japan. Italy here, Japan here. So what's the problem here? It's maybe not just the debt. When we look at this overview, one of the things that you see as well is the deficit that countries had in 2009, and we have ranked here or sorted the countries by deficit in 2009, the amount of money that governments were short. And Greece, you see, is there one of the top countries. What we have done as well is when you look at the growth estimate for 2010, and then you see that probably the explanation is why Greece has the biggest debt crisis is because it has its biggest deficit from GDP in 2009, and it had also the lowest growth estimates, or actually a negative growth estimate. So maybe what we're not talking here is in debt crisis, but maybe what we're actually talking about is in crisis in deficit and growth. What countries then, like for example Ireland, has a huge deficit, have a negative growth estimate for 2010, but expect to have growth again in 2011, and they by 2014 say that the deficit should be less than 3% of GDP, which is the EU target. If you look at these figures, say for the UK and the US, they have large deficits. Their debts in itself are not that high. The growth estimates are positive. So I would say that as long as their deficit is, let's say, there are often two components in deficit. One is the structural component, which is, let's say, if you won't do any economic stimulus packages, that's the deficit that you run. And then you have additional deficits on top of that, which are one-off stimulus packages to stimulate the economy. As long as your stimulus packages are not that high, let's say you can pay the financing cost in the future without having a too high deficit, then it's probably fine. So if I look at this one, I'm not too worried about the UK and the US. Portugal and France have maybe done less of economic stimulus. So these figures here, the question is how much of that is from economic stimulus and how much of that is coming from a structural deficit. If the structural deficit is higher, then those countries could be more at risk. You see Italy with them having a much lower deficit, and even their debt is higher. You never hear then that there are any problems with Italy from a debt crisis point of view. Key question here is Japan. It's an enormous debt. They will go over the 200% this year. 250% by 2015. Of course they have done huge stimulus, but they have done it already for a while, and you see that they the deficit as a percentage of GDP forecast, they can't really get it down to under 7%, even by 2015. So the growth here is pretty high, but Japan has a demographic issue as well. So could they actually maintain these growth levels, or are they just this high because the recession was so deep in Japan in 2008 and 2009? That's the question. In general, I think what we want governments to do is to have a very clear plan that they bring their structural deficit to below their economic growth as a percentage of GDP. And then what we want them to do as well is to stimulate the economy as much as possible, but don't take too much debt so that the financing cost for that debt would not enable them to have in the future years after the stimulus packages are over to have a deficit that is less than economic growth. Because if your financing costs are too high, then you can't have that deficit less than economic growth. So that's what we want governments to do. Structural measures to reduce their structural deficit, and at the same time stimulate the economy as much as they can, but not too much to risk their future deficit targets. We thought this was a useful overview. One of the reasons we make this is because we think that long-term investors should be aware of the economic situation they are living in, to be aware of what could be long-term economic trends, especially investors that invest in government treasuries, government bonds, which countries to avoid. We would say to those investors, if you want to invest in any government bonds or treasuries, keep a very close eye on the predicted deficits for that country and the predicted economic growth. Okay, thank you for your attention. See you back again.